Hey everyone, welcome back to Corporate Dakota, the place where we break down the murky world of business reports and reveal the juicy secrets hidden within them. Let's dive into the latest filing from Fidelity Mount Vernon Street Trust. Buckle up, because this report is packed with enough fund information to make your head spin, but don't worry, we're here to make it simple and exciting. And hey, if you love getting these kinds of raw insights into how big companies really work, make sure you're subscribed and hit that notification bell. We also have a Discord community linked in the description to discuss all things finance, so join the conversation. Alright, so Fidelity Mount Vernon Street Trust has just dropped their latest report for the period ending May 31, 2025, and it's a deep dive into several of their investment funds. We're going to focus on the numbers, what they mean, and what story they tell about these funds, and by extension, Fidelity's investment strategies. Right off the bat, we're looking at semi-annual shareholder reports as of May 31, 2025. This means we're getting a snapshot of how these funds have been doing over the past 6 months from December 1, 2024 to May 31, 2025. Let's start with the Fidelity Growth Strategies K6 Fund, FSKGX. The report tells us that its size as of May 31, 2025 was a hefty 828 100 and on 400 and all at 500 alls and 141 different investments, and its portfolio turnover rate is 36%. This means about a third of its holdings were bought or sold during the period, which is pretty standard for an actively managed growth fund. Now let's talk about where the money is invested. We see a significant chunk, 27.1% in information technology, followed closely by industrials at 26.4%. This shows a strong focus on growth sectors that are driving innovation and economic expansion. Financials come next at 12.8%, and consumer discretionary at 11.7%. All areas poised to benefit from consumer spending and economic growth. Healthcare is at 7.1%, rounding out the top 5. This diversification across sectors is key to managing risk while chasing growth. The vast majority of this fund's assets, 99.3%, are in common stocks. This is typical for a growth strategy fund aiming for capital appreciation through ownership in companies. Geographically, the fund is heavily tilted towards the United States at 96.4%, which is expected given the US market's size and dominance in many growth industries. The remaining percentages are spread across Israel, Brazil, Korea, the UK, Germany, and Canada, which is a relatively limited international diversification. Looking at the top holdings, we see Palantir Technologies Inc. Class A at 8.5%, Axon Enterprise Inc. at 4.5%, and Upalove Inc. Corp. Class A at 3.6%. These are all tech-focused companies, suggesting the fund's growth strategy is indeed leaning heavily into technology and innovation. Next up is the Fidelity Growth Company Fund, FCGKX, a much larger fund with a size of 648,566 darts, over $64 billion. It holds a whopping 586 investments and has a portfolio turnover. 86 investments might indicate a slightly more long-term buy and hold approach for some of its holdings. The sector breakdown here is much more concentrated in information technology at 47.4%, followed by consumer discretionary at 16.8%. and communication services at 12.8%. This is a significant tech overweight compared to the K6 fund, also showing a strong belief in the continued growth of the tech sector. Again, we see common stocks making up the bulk of the portfolio at 97.2%, but there's also a notable 2.5% in preferred stocks, which can offer a bit more stability than common stocks in certain market conditions. Geographically, it's also heavily US focused at 96.0%, with smaller allocations to Switzerland, Netherlands, China, India, Canada, Finland, Israel, and the UK. The top holdings really tell the story here. Nvidia Corp is a massive 16.0% holding. Microsoft Corp is at 8.4%, and Apple Inc. is at 7.5%. This concentration in a few mega cap tech stocks indicates a strategy that relies heavily on the performance of these market leaders. Then we have Fidelity Growth Strategies Fund, FDEGX, and its various share classes like FAGRAX, FKGX, FGSJX, and FGSHX. They all seem to share remarkably similar stats to the Growth Company Fund, with fund sizes around $3.8 billion, a bit smaller than the Growth Company Fund size 309, 110, 2468. These funds also hold 146 DOTICs. These funds also hold 141 investments and have a portfolio turnover of 48%. This suggests a consistent investment philosophy across these growth strategies. The sector allocations are identical: 27.0% in information technology, 26.2% in industrials, and so on. This indicates a standardized approach to growth investing across these different share classes, possibly differing mainly in expense ratios or investor eligibility. Again, Palantir Technologies Inc. Class A is a top holding at 8.4%, reflecting its importance in the fund's growth strategy. Moving to Fidelity New Millennium Fund FLX. This fund is quite large at $4.8 billion with 142% portfolio turnover. This suggests a growth strategy that's perhaps a bit more selective than some of the others. Scroll market sectors action to the sector breakdown here is also interesting. Information technology leads at 28.7%, followed by financials at 13.1%, and industrials at 12.4%. It's similar to the others, but with a slightly different emphasis, showing a balanced approach to growth across multiple sectors. Once again, common stocks are dominant at 99.2%, but there's a small 0.3% allocation to preferred stocks, offering a touch of diversification. Geographically, the US is still dominant at 94.7%, but with a slightly larger international allocation than some previous funds, including the United Kingdom, Italy, Canada, and Germany. Top holdings include Microsoft Corp and Nvidia Corp, both at 7.1%, Apple Inc. at 5.2%, and Amazon.com Inc. at 4.1%. This confirms the focus on large cap tech and growth companies. Finally, we have Fidelity Equity Growth K6 Fund, FEGKX, with a fund size of about $23 million, holding 126 investments, and a portfolio turnover of 59%. This higher turnover rate suggests a more active trading strategy, potentially seeking to capitalize on shorter-term trends within the growth space. Scroll market sectors, Nasdaq's net assets. Exception of the sector allocation here is familiar information technology at 28%, consumer discretionary at 17.5%, and healthcare at 14.1%. These are the engines of modern growth, and this fund is clearly betting on them. Top holdings like Nvidia Corp at 10.3% and Amazon.com Inc. at 10.2% show a strong conviction in these particular growth names. MasterCard Inc., Boston Scientific Corp., and Visa Inc. also feature prominently, indicating a blend of tech and healthcare giants. Now onto the financial statements themselves for the Fidelity Growth Company Fund. We're seeing total investment in securities at a massive $64.9 billion with a cost of $24.2 billion. This difference indicates substantial unrealized gains, showing the fund has performed well. Looking at the statement of assets and liabilities as of May 31/3/25, total assets reached $65.75 billion with liabilities of $445 million, leaving net assets at $64.63 billion. This healthy liability to asset ratio is a good sign. The statement of operations for the 6 months ended May 31, 2025 shows a net investment loss of $64.7 million. But this is more than offset by a net realized gain of $3.2 billion and a change in net unrealized appreciation of negative $4.22 billion, and a change in net unrealized appreciation, a common theme in growth portfolios when market conditions shift. The financial highlights give us a per share view. Net asset value per share started at $43.44.40 and ended at $39.20. This is a decrease of about 10% for the 6-month period, which reflects the market downturn and likely the fund's strategy in tackling it. The total return is negative 0.29% for the half year, which is a bit concerning, but the full year 2024 shows a strong return of 44.23%. This highlights the volatility inherent in growth strategies. Warren Buffett would say it's important to remember that past performance is not indicative of future results. Finally, the board reviewed and renewed its investment advisory contracts for all these funds. They looked at the quality of services, competitive fees, profitability, and economies of scale. It seems like the board is satisfied with how Fidelity is managing these funds and believes the compensation is fair and reasonable given the overall performance and market conditions. In my opinion, Fidelity is doubling down on growth, particularly in tech and industrials, which is a classic strategy for chasing high returns. However, the heavy concentration in a few mega cap tech stocks like Nvidia and Microsoft, especially in funds like the Growth Company Fund and Growth Company K6 Fund, does introduce a significant risk. If these tech giants stumble, these funds could take a substantial hit. The negative unrealized appreciation in several funds for the period ending May 31, 2025 is a clear sign of a tougher market environment for growth stocks. While the realized gains are impressive, the unrealized appreciation highlights the inherent volatility of this investment style. The vast majority of the assets are in common stocks and heavily concentrated in the US market. While this simplifies things, it also means international market shifts or downturns might have a limited direct impact, unless they trigger a broader global slowdown affecting US markets. Overall, Fidelity's growth funds are leaning into innovation and consumer trends, but the large cap tech concentration and the recent negative unrealized gains are noteworthy risks. Investors should be aware of the potential for higher volatility with these strategies. Alright, that's our breakdown of Fidelity's latest filings. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.